Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, China is moving quickly now that the US has withdrawn from the Trans-Pacific Partnership. But first, in the US, Trump advisors are considering appointing JPMorgan Chief Executive Jamie Dimon as Treasury Secretary. Wall Street's influence on US fiscal policy seems to be set to be enhanced. The official response to the GFC excesses are to be dismantled with a repeal of the Dodd-Frank laws, and Russia has admitted it was in contact with the Trump election team during the campaign. The number of Americans filing for jobless benefits fell more than expected last week, underscoring the strength in their labour markets. China is moving quickly to fill the void left by a likely Trump refusal to ratify the TPP. The void has offered Beijing an opportunity to argue for faster adoption of a broader free trade area in the Asia-Pacific. Given New Zealand has ratified the TPP, we will be in a prime position to take advantage of this revised opportunity. The only likely changes will be a weakening of the investment and labour protections built into the US-based agreement. You can see detail of the already negotiated TPP on our 21-part analysis series on the site. It is not hard to see how it could transition to a China-led one. In fact, China wanted to join the TPP, but were rebuffed around the labour and investment protection issues. China's reported that lending by banks rose 15.7% in the year to September, reaching $32.8 trillion. For an economy that is supposed to be growing at an even an official rate of 6.7%, this clearly is a pace that can't continue. Perhaps a sign of stress is that the same data release shows profit growth at just 2.8%. Leverage is getting extreme. Wall Street equity indexes are pushing higher as markets are getting to understand the large likely level of debt spending and fiscal stimulus to come from the new administration. It'll be fun to watch the explanatory gymnastics from the Republican Congress as the US federal deficit swells and borrowing levels require new debt ceiling authorizations. And the price of money is now rising quickly as investors want to be compensated for the new risks. In New York, US Treasury 10-year yield will start today much higher again, now at 2.10% and nearing a new one-year high. Our wholesale rates rose sharply yesterday as well, but will get pushed higher again today with this latest US benchmark spurt. US benchmark oil price is lower, now just under $45 a barrel, while the Brent benchmark is under $46 a barrel. The gold price is lower too, now under $1,265 an ounce. All the run-up in the past 2 weeks has now been lost. New Zealand dollar will start today lower than this time yesterday at 72.1 US cents. On the cross rates, it's now at 94.8 US cents, and the euro is at 66.3 euro cents. The TWI is at 76.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.